This period reminds me a lot about the mid 1970s. Gold was pegged at $35. And then, you had this rampant inflation cycle. And then there was a period where the central bank in the US basically said, hey, we got inflation under control. No need to worry about inflation. And people kind of ran away from gold, just kind of lost interest in it, which kind of sounds very similar to today.
Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Patrick Yip, Director of Business Development for APMEX, joins us today. Patrick has been with APMEX for some 13 years, and we look forward to getting more insights on how he sees the precious metals markets, in some cases, evolving. And we're delighted to have Patrick join us once again today. It's time to saddle up and silver up for Patrick Yip. Patrick, welcome back to SBTV. How are you doing?
Good. Thanks again for having me on, Patrick.
Glad to have you back on. Really glad. We're going to talk about some very interesting things that you're seeing going on. But regarding spot prices, we've seen gold move up and it's been holding the $2,000 level fairly well. However, silver still kind of asleep here. And from what you're seeing, why do you think silver is not reflecting the upward price movement that gold has?
Yeah, I think a lot of it has to do with the demand for a lot of these metals too. I think gold is typically viewed as obviously as a hedge, as a currency. You have central banks buying it. I think 2023 was the 14th or 15th consecutive year that central banks bought gold. Basically, it's known as basically the store value, right? I mean, people across the world buy it. I think silver is a little bit more interesting too because you have almost the precious metals play, plus you have the industrial play too, and the big question too is with silver is it going to follow the same path as gold and be the precious metals, or is it going to follow the path of copper where maybe it's viewed as an industrial metal? Obviously, there's a lot of uncertainty in the economy right now with interest rates. Whether we go into a recession, whether it's a soft landing, who knows? So I think that that's potentially hurting silver.
Right. Completely agree with that. I mean, I think we're seeing silver used more and more, especially with the photovoltaic over in China. We see them just the numbers they're producing using silver in these photovoltaic cells. It's just incredible what we're seeing there. But I mean, got to ask you because with gold, we've seen multiple new highs with gold, and with silver, hasn't even got. I mean, roughly to half of its all-time high. So, should we be concerned as far as the price action, price wise, with silver?
Yeah, I wouldn't be concerned. I mean, typically what's happened in history is gold rallies first, and I think you even saw that in 2011 too, where gold made that high in 1900, and then silver I think was still lagging. I think silver was around like 30 and change over there, and then gold corrected a little bit, and then silver performed later and basically to a greater extent. Obviously, it went from 30 up to 50 in 2011. So obviously, as a percentage gain, it way outperformed gold. So if history repeats, obviously no one knows exactly what's going to happen, but you're seeing gold rally, gold making all-time highs, and I wouldn't be surprised if some type of catalyst causes the precious metals to run, and silver just runs to a greater and faster degree than gold does. I mean, maybe it does another one of these things where it doubles. I mean, I think it's very possible that it could. Whereas gold is more, a little bit more stable. But yeah, I mean, silver I think is likely going to perform outperform gold at some point. And I'm a big believer in silver. I own quite a bit of silver, so I think you can't go wrong with having both.
Yeah, same. I'm biased towards silver, but let me ask you here because we're seeing a lot of movement on Comex. We're seeing a lot of movement on the Shanghai Futures Exchange, where physical movement is actually, or physical silver is actually moving out. So I just wanted to ask you, how is supply? I mean, your suppliers are they able to meet demand in time, or are we seeing a little bit of delays?
Yeah, so supply is a lot better now, and I would say there was a point. Obviously, everyone knows what happened in 2020 when you had the pandemic, but there was a point too when supply was unavailable. And this is getting into more. I think there's a different dynamic on the retail side and on the wholesale side too. But on the retail side is obviously Silver Eagles. Everyone knows what happened with premiums back then, and just to give you a little bit of a recap. I mean, typically, before 2020, Silver Eagles typically sold for about $3 or $4 over spot. Our cost was $2 over spot. Obviously, in 2020 you had the pandemic, you had the two silver squeeze movements in 21, you had Russia and Ukraine in 22, SVB in 23. At its peak, silver was north of $20 per ounce. So now it's going back down a little bit. Our costs are now, because of what's happened in the last couple of years. The U.S. Mint raised our cost from $2 to about 2.95 per ounce. They're currently selling for about $6, which is slightly higher than normal. Which I think there's probably still some room to go down and silver premiums on the retail side. And then to get to your other point in wholesale, so looking at the 1,000 ounce silver bars too, we use 1,000 ounce silver bars for One Gold, which is our online investment platform, where people basically buy a vaulted position of gold or silver. But there was a time that silver 1,000 ounce silver bars were available for probably 3 or 5 cents over spot. And at one point it was north of 30-40 cents over spot. It still is a little bit higher than what it has been, but the supply chain is getting a little bit better. We are starting to see products become more available as the world kind of returns back to normal after the last couple of years.
With silver, the premiums have always been much higher than for gold. Why is this? Why are premiums so much higher for silver compared to gold?
A lot of it has to do with the cost structure of the how mints charge. So, for example, the U.S. Mint, for example, they charge 2.95 per ounce of silver to an authorized purchaser like APMEX, right? And we have to make our money on that. So, typically, we sell it for a slight markup. Like I said, right now the current market's about $6. We're making a couple bucks. I would say it's probably normal around 4 or 5. So that's kind of where the how silver premiums are determined. Gold, on the other hand. Uh, the U.S. Mint charges us 3%. And from there, we typically mark it up, and we sell between 4 and 5%. So a little bit different spread over there, but a lot of it has to do with the cost structure. And then you could say the same thing too, even on, like, let's say silver maples. They cost us less from the Royal Canadian Mint than the U.S. Mint charges. So that's typically why, like, silver maples are cheaper than silver eagles. And then to take it a step further, you have silver rounds, and we have our own minting facility over here called Nine Fine Mint. So we essentially we're getting the raw silver, the silver grain. We're minting these actual rounds, and they cost us a lot less because you don't need to pay the US Mint to mint the Eagles. You don't need to pay for distribution of shipping this thing from West Point over here to Oklahoma City. So the cost structure is a lot lower for silver rounds. So we make a similar margin on this stuff, and that's why you might see a silver round sell for two and change over spot versus a silver eagle for $5 or $6 over
If
spot.
you're enjoying this interview with Patrick Yip and I, please consider subscribing to our YouTube channel. And if you're looking to get price exposure to gold and silver while being fully backed by physical gold and silver with some of the lowest prices and premiums around, I'd urge you to look at Silver Bullion's product, Stargrams. Go to www.silverbullion.com.sg, go to Precious Metals, and click on Stargrams. Okay, one more question with the premiums compared to 2023. How do you see premiums shaking out this year, 2024?
I think they're going to continue to decline. Not a ton. Like I think silver eagles, for example, they might go down to let's say $4 to $5 premiums. I think they're slightly high right now, maybe about $1 high right now. I would say gold eagles, they're probably going to go down to about 4 to 5% over spot. I think they're trading at just a little over 5% right now, so a little bit more downside, not a ton. And then with all the other coins too, they kind of follow the premiums of the silver eagles and the gold eagles. So as these decline, you'll likely see some of the other coins and rounds start declining too.
All right, so we're hearing about maples and rounds and silver eagles. What would you say are some of the more popular coins being bought or bars being bought?
Yeah, that's a great question. And I know we spoke about it a little before the call too, but in my opinion, your decision to buy precious metals, or your decision of what to buy, is just as important as your decision to buy precious metals, right? I mean, you don't want to now say, okay, I want to buy gold, and you bought the most obscure gold product that when it comes time to liquidate, no one wants it, right? It's like you don't want to do that, nor do you even want to get in an ETF. Like and we talked about this before, but ETFs are seeing record, basically, or not, maybe not record, but north of $3 billion in metal outflows last year too. When you compare it to like APMEX, which is a physical dealer, which is seeing north of two billion in retail sales. So people are choosing to buy certain physical products. They're getting away from ETFs, but to get into a couple products, I mean, we'll start with the gold side, and then we could go into the silver side too. But So about 68% of APMEX's sales are gold. So the vast majority, we are largely a gold seller. In terms of how people are buying gold, about 62% are buying coins, and then about 36% are buying bars. So those are by far the most common products. Very few are buying gold rounds, just a kind of an obscure product. But if you were to buy a coin, like I said, 62% of the customers buy coins. If I take that and slice that piece even further, so about 48% of those coins are gold American Eagles. So basically, by far, our most popular coin. You can't go wrong with a gold eagle. From there, about 17% is a gold maple. And then from there, about 14% is a gold buffalo. And then about 7% is a gold Krugerrand. Those are the top gold coins. So, sometimes you have, dealers and they might say, hey, I got a great deal on gold Philharmonics. Great coin. I have a Philharmonic. I have a single one. But let's say you were a big spender and you wanted to buy 100 gold coins, right? I would say stick with the eagle, the maple, the buffalo, or even the Krugerrand. Don't buy your 100 gold Philharmonics. I mean, they're nice coins, but when it comes time to sell and you're trying to liquidate 100 gold Philharmonics to one single dealer, he or she may say, you know what, I like the coins, don't really have an interest in buying 100 gold Philharmonics because I don't have the demand for them, and you'll get lowballed. So I would say stick with the Gold Eagle. It's going to be very hard to find any big credible dealer who's not going to just scoop up your 100 Gold Eagles, and it won't even make a difference because there's so much demand for this. And then kind of shifting gears from there too, I mentioned about 36% of gold sales were gold bars. And if I take that piece of the pie and I slice that even further, um, you're seeing about 23% of those gold bar sales are what we call a brand name gold bar. So we have a SKU on our website, on the APMEX website, that basically it guarantees you a brand name of gold bar, whether it's a PAMP Swiss, a Credit Suisse, a Royal Canadian Mint, basically like a well-known one. And that's the by far the most popular one. People just say, I want a gold bar. I want it from a credible mint. So that and typically those are a little bit cheaper than choosing your specific bars, kind of like your equivalent of your random year coin, is your random brand name bar. Another 21% is the APMEX bar, APMEX Gold bar. So obviously people trust our name. They like buying there. The APMEX bar. Going down further down the pie chart, so about 20% is PAMP Swiss, and then about 15% is Credit Suisse. And then the further from there, it's about 8% Valcambi. But same thing on the coins. If you're going to buy some obscure bar, and nothing wrong with these, right? I mean, you could, let's say you wanted a Rand Refinery bar. I mean, great bar, right? No issue with it too. But you're going to have a lot harder time liquidating a bunch of those. I mean, if you had one, not an issue, but you're going to have a lot harder time liquidating that than if you had a large quantity of PAMP Swiss gold bars.
Right. Great info there. Curious though, between bars and coins, the lower percentage that people are buying are with the bars. So I'm kind of curious because typically bars are cheaper than coins. So I'm kind of wondering here, how come people are buying more coins than bars? What do you think?
I think it has to do with credibility and recognizability. Obviously, the big advantage of a coin is obviously you get the sovereign backing. It has a little bit more detail. Like if you look at a gold eagle, a gold maple, it's a fairly high detailed product. You look at the gold bar, and obviously it's not quite as detailed. I mean, I guess maybe people are maybe a little skeptical, and they're just as credible. Obviously, you buy from any big dealer and you'll be fine. But I don't know. I mean, just a lot of people like the coins. That's what people tend to gravitate towards.
If you could open up your books just a little bit more and the metals that people are buying, I mean, silver, gold, platinum, palladium, how are these breaking down?
It, like I said, it's about 68% gold, about 30% silver, and then the remaining couple percent are platinum, palladium, and what we call non-metals. So things that people do buy copper rounds and stuff like that. I mean, it's more of a novelty, but by far we're a gold and silver dealer.
And you kind of touched on the 1,000 ounce LBMA bars. Are they because here in Singapore, I mean, just for comparison, the East and West, I guess. Here in Singapore, we do have people buying these 1,000 ounce bars retail. So I'm just kind of curious, do we see the same thing in the West? I mean, is a 1,000 ounce bar uh kind of a staple item to have?
I would say for the normal retail investor, I probably would not recommend it. And the reason for that is 1,000 ounce silver bars and kilo gold bars are pretty big bars. I mean, kilo gold bars are about the size of a cell phone. 1,000 ounce silver bars like the size of a loaf of bread, essentially. But the issue with it is if you buy it and take physical possession of it, and now you try to sell it to a dealer. They don't have that chain of custody. They don't know where it's been. They don't know if it's been drilled. They don't know if it's been tampered with. So it's when you try to liquidate one of these, it becomes challenging, and a lot of times the dealers are going to say, "Well, I have to send this to a refinery and melt it down to make sure it's assayed correctly," and you might get something well back of melt on that. If you do want to get things at a low price, I mean, what I recommend is either one you could do something like One Gold, right? I mean, it's a platform, online investment platform where you buy essentially fractional ownership in 1,000 ounce silver bar or a 400 ounce gold bar. So we sell gold for as low as 0.3%, 30 basis points over spot, silver for as low as 1% over spot. You're essentially getting that wholesale price of precious metals. But then the important part, like I mentioned, that chain of custody is intact. So we typically buy these 1,000 ounce silver bars from any of the big, well-known refineries. It then goes into a Brinks or a Loomis or a Royal Canadian Mint or so on. So we know that it's 100% good, 100% authentic because no one's touched it. It just basically sat and collected dust at Brinks, right? And then you basically could buy it, you could sell it, basically get ownership in wholesale bars. And like I said, you could, when you do sell it, you could request a withdrawal either by wire or by bank ACH in the US, and we'll send you the funds that same day. But that would be how I would recommend if you do want to get access to those wholesale prices and not have to pay the retail premiums of like a Silver Eagle. It's like definitely make sure that it is in some type of platform where that chain of custody is intact.
Yeah, I completely agree. Even for us, just to share, like with the 1,000 ounce bars, chain of custody is important, and also when we do, let's say we get a sell back, we do have to test it. I mean, density, we test it by ultrasound, we test the surface with X-rays. So, but the savings is there. Savings, it is there if you do move into it. But anyway, Pat, a lot of tensions all over the world. Now, normally we should see good movement in precious metals as people all over the world seek a safe haven asset. But so far, we don't exactly see a run to metals. Patrick, do you think a run to metals will come our way, whether it be geopolitical tensions, economies in trouble, or some other economic or financial event?
Yeah, I think this period, and obviously I was not around for the mid 1970s, but I've studied the past, and this period reminds me a lot about the mid 1970s and what happened there. Just to give you a quick background, obviously 1971 gold was pegged at $35 over here in the U.S., and then you had this rampant inflation cycle. Gold ran up from 35 all the way up to $200, and then there was a period where the central bank in the U.S. basically said, "Hey, we got inflation under control. No need to worry about inflation," and people kind of ran away from gold, just kind of lost interest in it, which kind of sounds very similar to today, right? It's you hear the Federal Reserve, they're like, "Yep, soft landing, we got inflation under control." People are like, "Okay, all's great in the world, and we're going to return back to normal," right? And you're seeing this lull in precious metals demand. Obviously, you're seeing things slow down this year, and even towards the second half of 2023 compared to what they were in 2021 and 22. But I think the next big catalyst too of what's going to cause precious metals to run is when the Fed lowers interest rates, right? And it's like you're right in this area where it's like, does it happen soon? Does it happen later this year? Obviously, the talks are, a few months ago they said, hey, the Fed's going to lower rates 6 times in 2024, right? That's obviously changed, right? Jerome Powell was actually on 60 Minutes last week, and I don't know if you caught that speech, but he basically said it was possibly a maximum of 3 rate cuts in 2024, with the first rate cut coming in the second half. You still have the CME Fed Watch tool predicting 5 rate cuts, so I think that the public's still thinking no, he's kind of just lying over here. But I think what's going to happen is the Fed will cut rates. I can't tell you if it's going to be in March or May or June or whenever, right? I think it's going to happen this year, and if history repeats and the Fed does cut rates, I mean, what's happened in the 1970s? As soon as that happened, inflation soared, and I know Jerome Powell is trying to say he's going to try to avoid what's happening in the 1970s, which I guess is to be determined, right? I mean, we'll see, but back then when the Fed lowered rates, interest, what is it, inflation soared, gold rallied from basically 100 all the way up to 850, made an eightfold move. Um, it's interesting because I'm looking at the jobs data too, and they keep on coming in a lot stronger than expected. So to me, that still says inflation's here, and I guess it's up to the Fed. Do they still cut rates later this year? Even if you have strong data or strong jobs data, or do they delay it? But I think you're right at the area where you could have a massive buying opportunity, and if gold makes this massive eightfold move, not that I think it will, but let's say it did something similar in today that compared to what it did in the 70s, maybe it doubles or triples. I mean, I've heard Rick Rule says he wouldn't be surprised if he saw five, six, $7,000 gold, which is definitely a possibility. But I'm personally looking at around this point to buy. This is typically when you do want to buy. I mean, just looking at APMEX sales histories, when people are kind of not buying, it typically is when you want to buy it. And it was even funny when gold first broke 2000, we saw this flood of buying coming, and obviously that was probably not the right time to buy because it dropped below 2000 a couple months. Obviously, these investors are probably in the green now because we are over 2000 again. But typically you want to buy when people are not running towards it.
Yeah, I hear you, Patrick. I mean, we gold investors, silver investors, buyers, you know, over time we have to learn about the economy. We learn about the politics, geopolitical things. We get really smart in all these things, but for whatever reason, when gold is down, silver is down, we don't buy. And then when it starts going up, then we chase it and we buy. What do you think? Why do you think we have this kind of psychology, especially gold and silver people?
Yeah, I don't know. It's tough. And every time I buy too, it was funny. I bought a decent size when we corrected down to I think 18 and change a couple months ago, and it was funny because I was like one of the only people over here at the company buying, and everyone's some people looked at me like, "You're buying now?" They go, "Yeah, it's a little difficult, but turns out looking at it now, I mean, I'll gladly buy back in the 1800s, right?" Uh, I'm looking at it too again today. Like, I mean, my thought is, possibly what could I see on the downside? I mean, maybe you get to, 1950, 1900, or maybe even lower. Obviously, no one. This is just my best guess, right? I just always look at things in terms of like, what's the risk versus the reward, right? I think gold's going to go significantly higher. I would not be surprised to see another, let's say, 20% up this year. It wouldn't be at it. I mean, gold's done that in the past. So what's your risk versus the upside versus what's your downside? You got a little bit on the downside. I think it's going to rally in the next couple of years, and you'll be fine at looking back at this.
All right, that sounds good to me. Now, the question I've been waiting to ask you, Patrick, your company at Mix, uh, you are supplying Walmart. I'm gonna, and I say that because when I look at Walmart, the inventory that they have, I see a lot of APMEX products. So I've come to this little conclusion here that, hey, APMEX, has some kind of arrangement with Walmart, and if so, could you tell us how this experience with Walmart has been, and is this Walmart market, is it a new market opening up to precious metals?
Yeah, that's a great question. So back actually in 2015 up till about 2018, I was the director of marketplaces. So I led the relationships with eBay, Amazon, Walmart. We were doing stuff with Sears even back then. But our relationship with Walmart started back in 2017. We were actually the first bullion seller on the Walmart platform. It's been an interesting journey too. I mean, but business has definitely been growing. The nice thing about Walmart too is precious metals is a closed category. So that means unlike eBay, where I could say, "Hey, I want to sell some goods," and I just type a description and I now list it up, and I'm on eBay. You can't do that with Walmart. So if you have a gold coin, you have something, they won't allow you to create a listing and list it up. So every seller that's on the Walmart side, especially in precious metals at least, and this would I don't know the other categories, but in precious metals, everyone's been vetted. Everyone's gone through an extensive KYC process, a review. They reviewed the company. So the good part about Walmart, if you're buying bullion on there, you know that the seller is legit. And APMEX is the largest seller over there. I think there's a few others on there too as well. But our business has grown year over year. Last year we did north of 50 million in sales on Walmart, which is quite a bit for that channel too. A key piece of that growth was working with the Walmart team to get visibility on their site. Obviously, I don't even know how many SKUs Walmart has, but I have to imagine hundreds and hundreds of thousands of SKUs at least, right? So it's like how do I get visibility for my precious metals on their site? So a key piece was working with their team. The way we view Walmart, it's just another channel, right? Some people, like, if let's say you were looking to buy something, some people go to Google and they type that what they're looking to buy. Some people go to eBay, some people go to Amazon, others go to Walmart, right? So it's just like it's their choice of platform. They said, hey, I'm looking for something, I'm going to go on Walmart. They search it, they find it. The nice part about Walmart too is obviously you could use your credit card, and you get your points back over there. And then you also have the marketplace protection. Not that people really need it, especially dealing with a credible seller, but some people feel a little bit more comfortable, right? If you order your product and for whatever reason it doesn't arrive, you got the backing of your credit card plus the backing of the marketplace. So it's a little bit extra protection, right? As opposed to, like I said, you don't have any issues with any of the big bullion dealers, but part of me every single time I wire funds, I'm just wondering is, it's like, okay, what's the risk? And I remember buying from Tulving back in 2012, and I was one of the, probably one of the last people that ordered before they basically stole everyone's money. But I sent a wire. I bought a box of silver maple leafs. Sent the wire, and part of me always wonders is like, is this the deal they go bad on, right? It's just like, unfortunately, it happens in our industry, but with marketplaces, you have that dual layer of protection with your credit card and the marketplace.
It's pretty interesting because I've been hearing Walmart, they've been saying how they can't keep enough gold and silver. It's been flying off the shelves, and so I was kind of wondering if is that what you folks have been seeing? The same thing where from Walmart anyway, a lot of buying has been going on.
Yeah, and I would say last year was our best year on Walmart. So it has definitely been picking up. I think that it's nice to see some of the more general public be more interested in precious metals. And to me, Walmart's a mainstream, general public platform. I mean, everyone's going on Walmart. But yeah, it's nice to see record sales there. One thing to note too, and then I tell it to my team a lot of times too, is you say, okay, well, Walmart's selling precious metals. You even hear Costco selling precious metals, and it brings you to the question, is precious metals in a bubble, right? And sometimes you get that, and I know the Super Bowl is right around the corner. What's interesting is I don't know if you keep track of some of these Super Bowl commercials, but I remember back in 2000, you had a pets.com commercial, right, on the Super Bowl, which I don't know what Super Bowl's commercials cost, but let's say north of $1 million, right? And shortly after, you had the .com crash, right? And it's just like, okay, there was too much liquidity in this .com era stuff. 2000, I think 22, you had a crypto.com commercial on the Super Bowl, right? What happened to cryptos after that, right? Didn't do so well if you were in Bitcoin. Certainly it's going up now, but my thought is even though Walmart, Costco selling precious metals, not until you see some precious metals or gold commercial on the Super Bowl, is gold going to be in a bubble.
You spoke about marketplaces, and that was something interesting as well because I mean, besides the let's say the WalMarts, the eBays, are you seeing, let's say, new customers coming in from places, let's say like YouTube, for example?
Yeah, and YouTube is by far one of our best sources. Like I manage a One Gold platform in terms of growth and marketing too, and we do a lot of these podcasts. I appear in some of these. My colleague Levi's beginning to appear in some of these too as well. But we're seeing a good chunk of our new customers appear on podcasts like this. I think especially for people who are a little bit distrustful of the mainstream media, because to be honest, everyone has an agenda, right? It's like you go. I mean, you know to be honest, I'm trying to sell my company here, right? You go and see NBC. They're trying to promote their agenda, right? Everyone has some sort of thing they're trying to pitch, but I find that people generally find YouTube content a little less biased because they could choose exactly what they want. If they like to listen to this podcast, great, listen to it. If they don't, they close it out and go elsewhere. But we do get a lot of people from our podcasting channels. We do get some high net worth customers too. I mean, we've been on Palisade, we've been on Stansberry, we've been on a couple of these other podcasts, and we do get 6 and 7 figure customers sometimes from these podcasts that say, "Hey, I've heard of you, trust you, trust your company," and but I honestly think it's a great platform.
All right. Patrick Yip, interesting info you've given us. Before we head out, can you tell us how we can follow you and maybe what's coming up with that mix?
Yeah, I would say if you're interested in physical precious metals, check us out. It's atmex.com, apmex.com. If you're interested in basically a low cost and easy way to get into precious metals, check out onegold.com. That's onegold.com. I think a lot of you guys may be aware, but we also have our credit card called the Bullion Card. It's the first precious metals rewards credit card, so you actually get to earn gold and silver instead of cash back or airline miles. You could check that out at atmex.com/the bullion card. But yeah, a lot of stuff going on.
Oh, good stuff. Good stuff. Patrick Yip, I'm always impressed every time. Well, I've spoken to you twice now, but always impressed with what you have to say and the product. So thank you for sharing that with us. And thank you for your time as well. And I hope we can do this again soon.
Great. Well, thanks again for having me on, Patrick.
That was Patrick Gibbs sharing his views on the economy and gold and silver. To follow Patrick, please go to www.apmex.com. If you like this video, please subscribe, share, and give us a thumbs up. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.